So, hello everyone. As you all know, the Honorable Finance Minister presented the 2026 budget today on the 1st of February. And since it's 2026, I'll try to summarize the most relevant 26 things which were said in today's budget, according to me. In this video, whether you're a salaried person, a business owner, or just curious about what's happening, what's new, I think this video can be helpful for you. And mostly everything will be tax related because that's what my forte is, and I think I'll be able to speak on them more properly than actually something else. So there has been no change in the basic tax rates, be it surcharge, be it cess, no changes at all. The government has kept things steady this year, and the 4% cess is also there, and TDS advanced tax rates are also mostly the same, and so is the income tax slabs and everything. Also, the Income Tax Act 2025, the new income tax act which was supposed to get implemented, that was also mentioned by honorable finance minister, that it will starting 1st of April 2026 it will get implemented, and it has already been written in a very simple language so that ordinary people can understand and follow it without. So that's what the government says, that you don't need a tax expert to actually read that law, but views can vary. And also you will see on the screen, I just forgot to mention that I've categorized the 26 things which I found relevant into 5 categories, so it's visible on the screen, but I'll be talking about it on an ad hoc way so that it's easy for the flow. Next, talking about the foreign assets of small taxpayers. So there is a one-time disclosure scheme that if you have small foreign assets or income that you have forgotten to declare, like maybe for example a small bank account from your student days or a small investment that when you were abroad you did, now there's a one-time window to declare it without any heavy penalties of prosecution. For income up to 1 crore or assets up to 5 crore, you can pay the tax and a bit extra if needed, and then you're safe. So this is a great relief for students, NRIs, and professionals who have actually missed declaring small foreign assets. Talking about interest on MACT compensation, MACT is basically Motor Accident Claim Tribunal. So now if you or your family receive any interest from a Motor Accident Claim Tribunal, which is abbreviated as MACT, now in that case, that interest which was not earlier tax-free is now fully tax-free, and there will be no TDS on it. So government is trying to support accident victims and their families. So in times of distress, you don't need to pay tax. That is what the government is trying to say, and that's a welcome move. So the families will now get the full amount, or the person who's affected will get the full amount without any TDS deductions whatsoever. So this is a good move. Talking about rationalization of rates of tax collected at source. So there were things that were announced in the budget, like the alcohol, tend to leave, scrap, and minerals. Now there's a flat TCS rate of 2%. Also TCS on overseas tour packages and on money sent abroad. There is a LRS, liberalized remittance scheme. So now all of that TCS rates on all of these things has been reduced to 2%. So now the implication would be that the lower upfront tax will be there for buyers, and there will be easy compliance for sellers as well. Talking about STT, the Securities Transaction Tax, particularly government has tried to curb the trading on derivatives, it being very risky. Now if you trade in futures and options, earlier when you had to pay a higher amount of STT, now you have to pay 0.05, I mean a lower amount of STT. Now it has been increased to 0.05% for futures and 0.15% for options. So this has obviously made the trading cost a little more higher for the FNO traders. Government trying to rationalize and curb a little bit of FNO trading, not exactly curb, but also try to control it, because a lot of people try to actually appreciate the capital in a quicker way, and in an attempt to appreciate the capital in a quicker way, so they make a lot of losses, and that is where the government is just trying to curb this thing. Next, talking about buyback taxation. Now the buyback taxation completely has been shifted to capital gains. When companies actually buy back their shares from the investors, the money that will now be received by them will be taxed as capital gain, as not as dividend, which was done earlier by the government. But if you're a promoter of a particular company, you'll have to pay an extra buyback tax, 22% for companies and 30% for others. So now it is more fair for regular investors and promoters now actually can't use buybacks to avoid tax. So this is something that has been done by the government. Talking about MAT, which is minimum alternate tax. So the companies had an option to pay the tax under the normal regime or the MAT, whichever is higher or whatsoever. So now that regime has been particularly overhauled. Now for companies, MAT will be a final tax in the old regime, not the new regime, and the tax rate has been reduced from 15% to 14%. And if a company has a MAT credit, it can only be used in the new regime. So the government is basically trying to attract companies to the newer regime and trying to get them shifted to the new regime. And that will also be limited. The MAT credit that they can use in the new regime will be limited to 25% of their tax liability. So this is something that has been done. So it is just an encouragement to move towards the newer regime, and that is what the government has the intention going forward as well, for people to adopt the new regime. Talking about transfer pricing, there are safe harbor rules which have been made very simpler. If you are a tech or IT company doing business with your own branches or group companies abroad, the government has made things actually easier. All IT, information technology enabled services, which is abbreviated as ITES, knowledge process outsourcing, KPO, and contract R&D services are now under one ITES category, with a fixed profit margin of 15.5% required for safe harbor. And the limit of actually opting for this safe harbor is also increased from 300 crore to 2,000 crore in revenue actually. So now the implication being the big tech companies can actually plan their taxes better and avoid long-term disputes. So the APAs also will get reduced as a result of this. So this is also a good move done by the government. Talking about APA advanced pricing agreements, they have tried to make it more faster. If a company wants more certainty, it can sign an APA with the tax department. And for specifically for IT services, the government has promised that they will finish these APAs within 2 years with a possible 6-month extension. And associated companies can also, update their tax returns to match the advanced pricing agreement. So there will be less waiting, less confusion, and fewer tax fights for companies who are actually working with foreign branches or group companies. Talking about tax holiday for data center services. So foreign companies, the companies which are not based out of India, but foreign companies who are providing global cloud services will and using Indian based data centers will now get a tax holiday till 2047. So 21 years almost from now, as long as the Indian customers are served through an Indian reseller. So now this will boost the India's data center and cloud ecosystem and attract global tech giants in India. Talking about toll manufacturing incentives, now foreign companies that are providing capital goods to toll manufacturers in bonded zone for electronic manufacturing will get a 5-year tax exemption. So this will again attract global supply chains and manufacturing to India. So government is trying to boost investment into India in all possible ways, because that is obviously better for us and the economy in the long run. Now talking about exemption from global experts. So there are some non-resident experts in a particular field or whatsoever. So the non-resident experts who are working in India under some notified schemes will get an exemption on their global income, not global income as a non-India income, for up to 5 years. So this will again attract global talent to Indian projects on whatever field whatsoever. Talking about cooperative societies. So government has said that the cooperatives can now get deductions for inter-cooperative society dividends under the new regime if they pass it on to its respective members. Cattle feed and cotton they had mentioned now, so these are also now included for deduction. Cotton seed and cattle feed, and now this will again strengthen the cooperative sector and support the farmers, which is again the backbone of our Indian economy. Talking about ease in filing and removing the administrative burden, now we will have more time to revise our tax returns up to 31st March, obviously by paying a nominal fee. So now there are staggered ITR due dates, and now we can apply online also for lower ordinal TDS certificates. So last minute rush will get avoided and easier compliance for everyone. So that's the objective of the government. One more important thing that has happened is now there is no TAN requirement for NRIs who are purchasing property from India. So if you are a resident and you are buying property from a non-resident, so I am an Indian resident, I am buying property from a non-resident, let's say based out of US. I don't need to get a TAN anymore. I can just use a PAN-based challan. So this has again made the property transactions with NRIs much simpler, because this was a challenge a lot of people were facing. Manpower services, if you are providing manpower services, then a TDS, now manpower services has specifically been included in the section 194C. Payments where we deduct TDS on contractors, and depending on the nature of the contractor, 1% or 2% TDS will be deducted on somebody who is providing us manpower services, and not 10%, which was earlier deducted as professional fees. So now manpower services will actually be classified under 194C instead of 194J. And again, this will help in lower TDS rates and less confusion for service providers, which was there earlier on how to classify this particular service. Also, the government has said that we can no longer claim a deduction for interest paid on money borrowed to invest in shares or mutual funds. So let's say, for example, you go to a bank, you borrow money, and now you're actually paying an interest on that particular loan, and you use that money to invest in mutual funds or shares. A lot of people do that. So then you cannot claim it as a deduction. And now this will result in a higher effective tax on such passive income. Talking about SGB, which is just sovereign gold bonds. So now the capital gain exemption for SGB has only been given to long-term holders. So if you will get a capital gain exemption only if you bought them at the original issue and are holding it till maturity. So this has encouraged the holding of SGBs till longer period of time, and capital appreciation in turn. Talking about disabled people, government has had mentioned that this being a budget where they are trying to focus on people who are not very abled, I would say, who are disabled and who are not very capable to do something. So what the government is trying to do is for particularly the armed forces, both the service and disability elements of the pension for people in the armed forces who are disabled are now exempt, and who are so these kind of people actually get invalidated out of service, not for people who get retired normally. So what they have done is they have given exemption for the pension these kind of people receive, so that it benefits the disabled armed forces and paramilitary personnel and everyone. Again, government talked about the exemption for compulsory land acquisition. Sometimes government compulsorily acquire a particular portion of land from you, stating that this belongs to the government and everything. So under the RFCT LARR Act, it is the income that a person, and government obviously gives a compensation when they acquire a particular portion, because obviously it will be very detrimental if out of the blue government acquires a particular compulsorily acquires a portion of land from a farmer or any person whatsoever. So now the income which was earlier not exempt is exempt, and this is a relief for specifically farmers and landowners from whom government was compulsorily acquiring this portion of land. Talking about penalty and decriminalization of certain offenses. So many technical and minor offenses are now subject to only a fee instead of a penalty. There are transfer pricing fees that have actually been resorted to only a fee rather than a percentage based penalties to make things easier. And now prosecution is only for serious offenses, with jail terms being reduced and more cases eligible for compounding. So again, this reduces the fear and litigation for taxpayers, which was there throughout and has been throughout. Talking about integrated assessment and penalty orders. So what the government has suggested is that the assessment and penalty for underreporting or misreporting of income will now be in a single order, which will reduce multiplicity and uncertainty for the taxpayers. And now this will also result in a faster closure of tax disputes. Earlier, there used to be separate orders, and people were spending a lot of time responding to it, giving different submissions. So this will again, on an administrative side, be an easier thing for the taxpayers. There is also a facility given by the government for an updated return. So we can now file an updated return even after a reassessment notice with an additional 10% tax payment. And this would again imply, more opportunities for voluntarily people, complying, and because of reduced litigation aspects and everything. There are other technical and legal clarifications which the budget has suggested, which can be understood on a very clear reading of the memorandum. And there's a budget speech that which is also released, and the whole finance act. So there are minor clarifications with nothing specific. For example, to clarify certain time limits for assessments, to remove certain referencing errors and definitions which are very admin. So in the paucity of time, it is not possible to discuss all in this particular video, but this will again reduce confusion and future disputes. So this is something which is done this is not a very significant change, but this is done in every budget or every finance act implementation whatsoever. Talking about indirect tax changes, when we talk about customs, excise, and GST, there are certain changes in customs and excise duties specifically to support domestic manufacturing, promote exports, and simplify processes. For example, there are some exemptions being removed, some rates being rationalized, and custom processes are also made more digital and user friendly. So this again makes it easier for businesses to trade and manufacture in India. So I hope I just tried to go a little quick, because in the best interest of all of our time, and I hope this was helpful. And to understand these aspects in a better way, and the portion that I've tried to limit myself for a discussion purpose, just try to, for better clarity, just try to go to the Finance Act memorandum and the bill in general for better clarification. So I hope this video was helpful, and you can make the best out of it. Thank you so much.